This video describes a recent trade I took on September 15th, 2015. The trade was in Eaton, and I used multiple time frames to first get an idea for the trade and then to pinpoint my entry. So in front of you it's a daily chart, and this is what really gave me the idea. I was thinking that the stock would decline further to the red line and fill in that previous gap around the 51.50 price level. Okay, next up it's a 30-minute chart of Eaton. So each bar represents 30 minutes of price action. Took place during the course of October 15th. So you can see, if you look to the left of the chart, to start off the day had a pretty heavy decline in price. So it's represented by those 5 30-minute red bars. So it wasn't until around 51.40, and that was a level I was targeting on the daily chart, that buyers actually started to step in and support the price. So you can see it was the open of the second green bar is indicated by the circle on the chart. That was where I had initially entered into the position, and so the idea for entry was if the price pushed above the high of the prior green bar, I would enter, and I set a stop loss at around 51.40, so it's the low of that initial green bar of the day. So I was risking about 20 cents, and ultimately the price did push up past 52. It settled at around 52.10 to end the day, so that was around 50 to 60 cents of gains. So it was a good entry for the position. So from the point of entry until the end of the day, I was up around 1% on the trade. Okay, so next up it's a 5-minute chart of Eaton. Each bar represents 5 minutes of price action that took place during October 15th, and the circled bar represents my point of entry. So it's a different perspective, and you can see that where I had entered, the price was pushing above that red line, which corresponds to the 10-period EMA. At the same time, the stochastic was indicating that the price was coming out of a very oversold condition, so it was pushing above the 20 level. So this was yet another piece of evidence that gave me confidence to enter into the position that, at least over the very short term, that buyers would be stepping in to support the stock here. Okay, so finally this chart, it's a daily chart. It shows the result. So the last candle represents the day that I entered into the position. So the result was a 1% gain on the day, and as I had anticipated, buyers did in fact step in at around the 51.50 level. So I ended up getting in at around the lows of the day. So this is a good example of how you can use multiple time frames to initially screen for trades, and then to use a shorter time frame to pinpoint entries to actually risk less on a trade.